Welcome. In this video, ZBCN coin when will take off. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. In our previous video, we examined this descending trend structure in detail, and it still remains relevant. Since then, following the breakout from this descending trend line, we can observe that the price has entered a phase known as a retest, which is a classic behavior in technical analysis. This retest phase can often last much longer than many investors anticipate, becoming one of those processes that teaches market participants patience. That's because in financial markets, price doesn't always surge immediately after a breakout. More often, the market exhibits indecisive behavior, first confirming the new support level before initiating a strong upward trend. The structure we are currently observing fits this exact scenario. After breaking through the descending trend line, the price is now hovering around that level, gathering strength. During this phase, we might witness small pullbacks, sideways movements, or even false breakouts. However, what truly matters is that these prolonged retest periods often signal stronger and more sustainable upward moves. Especially during such consolidation and retest periods, when impatient investors are filtered out, significant opportunities can emerge for those who remain patient. That's because during these extended retests, the price forms a solid support base, and any upward movement built on this foundation tends to be more powerful and long-lasting. Investors who avoid rushing and observe the structural development of the price patiently are more likely to be rewarded with larger price increases. At this point, correctly reading the market from a psychological perspective is also crucial. Retests test investors' confidence. Many tend to grow impatient when the price doesn't rise quickly and exit their positions early, but waiting periods like this are inherent in the market, and the biggest gains often go to those who pass this test of patience. In conclusion, the ongoing extended retest is, from a technical standpoint, forming a very healthy structure. The price is attempting to settle above the descending trend line, reinforcing its support level and building momentum. At the end of this process, once the retest is complete, a strong and sustainable upward move appears highly likely. But it's important to remember that looking only at trends isn't enough. We also need to consider other metrics. Stay tuned. When we closely examine the chart, we can clearly see the formation of another significant pattern, the inverse head and shoulders, H and S pattern. This is known as a highly reliable reversal pattern in technical analysis, and typically signals that the market is preparing to reverse direction after a prolonged downtrend. Looking at current price movements, we can see that all the structural elements of this inverse H and S pattern are forming in place. Initially, the price formed the left shoulder, creating a low and giving the first major signal. Then, the price moved further down to form the head. The head represents the deepest point of the pattern and reflects the stage where the market experiences the highest level of panic and selling pressure. A significant sell-off may have occurred at this stage. However, the price began to recover and move upward again. With this upward move, the neckline resistance area became more defined. We are currently in the process of forming the right shoulder. During the formation of the right shoulder, the price typically does not make a low as deep as the head, which indicates that selling pressure is diminishing and sellers are starting to lose strength. What we are observing now aligns with this scenario. As the right shoulder forms, the price is pulling back in a more limited manner, suggesting that buyers are gradually beginning to gain control. For the pattern to be completed, the price must move toward the neckline and break this resistance with strong volume. Once the neckline is broken, the pattern is considered technically confirmed, giving us a clearer projection for the price target. The target for inverse H and S patterns is calculated by measuring the distance from the lowest point of the head to the neckline and projecting that distance upward. This implies a considerable upside potential from the current price levels. However, there are important factors to be mindful of during this process. In particular, trading volume is expected to increase at the time of the breakout. If volume remains low during the neckline breakout, the likelihood of a false breakout increases. Therefore, volume confirmation will be a key factor in determining whether the pattern plays out successfully. At this stage, it's essential to closely monitor market volume. From a psychological perspective, inverse H and S patterns also carry significant weight. The initial drop during the left shoulder causes concern among investors. The larger decline forming the head plunges the market into pessimism. However, during the formation of the right shoulder, the drops become more shallow and buyers begin to gain confidence. This is a strong psychological signal that the market is preparing for a reversal. The fact that the price is currently in the right shoulder phase may present a valuable opportunity for patient investors. Once the right shoulder is completed and the neckline is broken, it will mark the beginning of a major move. Those who remain patient and react at the right time to the breakout may realize significant gains. It's important to remember that the strongest rallies often come right after periods when most people have lost faith or are caught off guard. The inverse H&S pattern is exactly the kind of formation that signals such a reversal. In conclusion, the inverse head and shoulders pattern we're seeing on the chart has reached a critical stage. We are currently watching the completion of the right shoulder and the price approaching the neckline. If the neckline is broken to the upside in accordance with the rules of the pattern, and this breakout is supported by strong volume, the probability of reaching the pattern's technical targets will be quite high. Therefore, it would be a wise approach to observe this structure and price action very carefully and to make strategic moves after a confirmed breakout. Those who are patient will surely be rewarded. When we take a closer look at the RSI indicator, we can clearly observe the presence of a notable downward trend structure. Specifically, the RSI has been forming lower highs over a certain period, moving systematically downward, which sends a strong signal that market momentum is weakening. In other words, although buyers have occasionally triggered short-term upward moves, overall, selling pressure has been dominant, reflected by the RSI making progressively lower peaks. The existence of this downward trend can also be seen as a technical reflection of the market's recent indecision and loss of strength. However, the key point here is that the RSI is once again approaching this strong descending trend line and is now at a crucial decision point. If the RSI can break above this powerful descending trend line with significant volume, it would mark the beginning of a major technical shift. Trend formations on the RSI often provide important clues about the future direction of price movement. Currently, the distance between the RSI and the descending trend line has narrowed significantly. Historically, when such long-lasting downward RSI trends are broken, strong and sharp price increases are often observed on the chart. For this reason, the current technical setup creates a window of opportunity that should be monitored very closely by patient investors. A potential breakout in the RSI is not just a technical detail. It could also signal a major shift in market sentiment. Moreover, a breakout in the RSI doesn't just indicate a potential price increase. It also signifies a restoration of confidence in the market. Especially given the recent period of sideways and weak price action, a breakout in the RSI could dispel the atmosphere of uncertainty and bring buyers back into the market with greater conviction. This would allow the price to rise more steadily and powerfully. Another critical detail here is the sustainability of any breakout in the RSI. Initially, the RSI may rise above the trend line, but to confirm whether this move is genuine, we also need to observe price action closely. If, after the RSI breakout, the price also breaks through key resistance levels and gains upward momentum, then the breakout can be considered real and healthy. On the other hand, if price remains weak after the RSI breakout, it could suggest a false move, and caution would be necessary. In technical analysis literature, RSI trend breakouts are always seen as significant because the RSI is one of the few indicators that can signal trend reversals ahead of price movements. Therefore, whether or not the current descending RSI trend line is broken may be decisive not just for short-term, but also for medium and long-term outlooks. At this point, patience, discipline, and proper timing are of critical importance. If the RSI breaks its descending trend, we may see rapid and strong price increases initially. However, it's important to remember that due to the nature of the market, minor pullbacks can sometimes occur even after breakouts. Caution is advised. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.